we hear somebody talking on the phone or somebody getting in the background. So please do that. First thing I want you guys to show you is here. If you have the Thinkorswim monitor open, please hit Setup here to the top right, Application Settings. I want you to go on System, and where it says Quote Speed, you should be on real-time, no delay. Usually, even though Thinkorswim, they're gonna tell you that you have real-time data. They usually get you like a 10 seconds delay, 3 seconds delay. So make sure you get the real time, the no delay. And just apply settings after that. First thing you want to do is that setup, application settings, system, quote speed, real time, no delay. Also, if Kian and Shane can help me writing down the answers too, that'd be helpful. Otherwise, I can do it,
I
but
got it.
just so yeah, make sure you're on the real time. No 3 seconds delay, no 10 seconds delay. Okay, so we can start now. First thing I need to talk to you is time frames. Okay, so what time frames do we look at SPY? I personally do one chart like this, 15 minutes and 5 days, 5 days and 5 minutes, and 1 day and 1 minute. My big chart is the one that you guys are seeing here. This one I rotated. So sometimes I'm looking at the 5 minutes here. Sometimes I'm looking at the 1 minute. Sometimes I'm looking at the 15 minutes. If I'm trying to scalp. If I'm trying to get into a scalping position. On another screen, I have this. I have the same ticker here in 2 charts. One, I have 1 day and 1 minute, which is this one. And I have the 5 days and 5 minutes. These ones I do not change like the other one. These ones I always keep them like this. So we have 3 charts, right, that we're looking. We got 2 small charts. One is gonna be on the 1 day and 1 minute. Another small chart. Another small chart with the 5 minutes and 5 days. Is the stream blurry for anybody else? Hello? On and off. Well, let's see on the chat. Let's try it like this. If no, I just go back to it. Okay, some people say it's blurry, some people say it's not. Okay, well, let's continue like this. If it gets very bad, just let me know and we'll do it again. I close my stream and I open a new one. So again, we have 2 charts here on the flexible grid. We have on top 1 day, 1 minute. We have 5 minutes and 5 days. And we have for other chart on the 15 minutes and 5 days, and I keep changing that one as well. This is the one I rotate. This is the one sometimes I keep it on the 5 minutes. What do I have on every chart? The blue lines, they're all support and resistance. That we're with it later. In studies wise, I have for the main chart, I have a volume study. This is the one from Kians. We all have it. You can use that one or you can use a volume average. So they all work the same. As you notice here, I have volume average and it works just fine. And these two are the two main ones that I use to trade. This chart is more a support if I'm trying to cut or see if I should stay in a position and I'm not sure about these two charts here. I keep an eye on the big chart, but the two main charts that I use are these two. And as you say, I keep them pretty simple. I only have volume, support resistance, and candles. That's it. So for the main one, this is how the setup looks. I can send you a screenshot on that. So if I go to studies, edit studies, TTM squeeze and ATR, don't worry about those now. Those are not, I barely use them. That's more for me and when I'm trying to study volatility. So don't worry about the TTM squeeze and the ATR for now. That's not, I don't use them at all to trade spike. So I can send you a screenshot on how are those set up. That on the chat for you. Let's see. Crazy. All right, so now you have it too. For the other charts, I just keep it like this. Studies, 8 studies. I only have volume average. So as you see, it's simple. All right, let's talk a little bit about the time frames. Especially, we're not going to use the main chart as much. Again, the main chart is an extra help. But the two main charts that I use are these ones, the 1 minute, 1 day, and the 5 minutes, 5 days. First thing I like to see on these ones, it's the volume. Let's go way back when actually there was volume and spike during the day. So you see this yellow line here, that's going to be the average. Every single one of these bars is 1 minute. The red bars indicate more sellers, the green lights indicate more buyers, and the blue indicate like equality. Same thing with the 5 minutes. But now every single one of these bars are going to be 5 minutes instead of 1 minute. So I want to see volume on both, ideally. And the good thing about this volume study is that they don't just show up. They form as the time when the next 1 minute candle starts. and it starts very low until it gets here, and then that's it. That's another minute, and it starts here. So they don't just appear on this size. They keep building this size. And to the right, you're gonna have 1,000 here. This is the average volume. So if you see the yellow line, and you see, well, at 12:30, or let's do it here. Let's do at 12:12. The average volume is about 153,000, and it's not even been 30 seconds, and we're already at that. We're already at that average. So that's pretty good. That means we're gonna have volume coming, right? But at the same time, look at the other two. They were sellers, not buyers, and they weren't above the average. So that might not be your best indication. Ideally, you want to see at least two of these in a row for the 1 minute chart. Like you see here, you have two, and it went up somehow. Same here. You see that out of the average. It goes all the way from 389 to 390.4. Same thing applies for the 5 minutes. You do the same thing, you just think on different time frames. The 1 minute is the best one to right before you entry. You want to look at the 1 minute right away. So if you see, let's say you want to get calls here. You see, we bounce off support, and it looks like we have a lot of buying coming. So let's say you want to get call. What I always do, I make sure that the one that it's coming is still green, and that there's buying pressure coming. I also keep an eye on the 1 minute and the 5 minutes, and make sure it looks good as well. What do I mean by it looks good? So let's say at here, I see something similar. I see a downtrend. One here. So I see the downtrend here. We got a high, we got a downtrend. There's support. We play a little below support, but I also see a lot of buying coming here. So once I see the two charts telling me pretty much the same, and the 1 minute, which is the one that gives me the immediate price action, give me the you're good to go, then I enter. And it's the 5 minutes, most of the times it's going to look good regardless. The one that starts showing any signs of reversals first is the 1 minute, because it's a shorter time frame. So that's how you have to understand this. Like, the 1 minute is going to show you if we're close to support or close to resistance. The 1 minute is the one that is going to give you a better perspective on what is happening right now. Does it look we're going to on resistance and going down, or does it look like we're actually going to break? That 1 minute chart is going to be your most reliable tool for that immediate price action. And then with the 5 minutes, you have a better overall look. Sometimes the 1 minute can look bad, and you're in a position, but you say, well, with the 5 minute, it still looks good. By looks good, it means that if you're on calls, it's still showing you a lot of buying, and if you're on puts, it's showing you selling pressure. So if you say, well, the 1 minute start not looking as good, but I still think the 5 minute looks good, then you go like, okay, well, let's see, let's wait if in fact the 5 minute chart is going to correct the 1 minute, or if the 1 minute is making a false reverse and it's in effect going to fix itself. So that's why I like to compare them both. Please ask me questions in the premium chat, and I will be reading at them. Okay, so that's a little bit about time frames, right? Let's talk about support and resistance. So I have all these blue lines here. I know it looks overwhelming, but let's see. Let me show you how I do them. It's pretty simple. I have too many because I trade SPY a lot, and as you see, if you see them here, it looks super messy, but once you zoom in, it's not as bad. See, like here, you can actually see between these two because it's zoom in, but if you zoom it out, it doesn't look as good. To get these ones, I usually start with a 5-day, 5 minutes. Let's do a different stock, something, since I already have them on SPY. Let's see, Silo. So I usually go by time frames. I go from, you can even start here. I usually start with for the 20 days and 1 hour. Since we're scalping, we can count on things like that. And the tool is going to be on Thinkorswim on drawing tools. And it's going to be the second to the right from top to bottom. The says price level. So it's going to be a tool. And what I do, I just see all the tops of the candles and I draw a line. For example, here, this is the price. It's at 150, so I don't have to be drawing a line at 208. I look at it, and sometimes you can draw one here at this week. You draw another here. You see it here, we'll have almost at the same price, so that's good. We always like to see that. There's actually, yeah, almost here. And I move on. Like here, I already got two from the 1 hour. I go on the 30 minutes now, 10-day, 30 minutes. I see what other supports I have. I see another support here. I can draw it. See another one here. I can draw it. I see a little bit of resistance here. That's resistance. When you see, wait, hold on. That's resistance. When you see that it's trying to reverse a doji here, but it can go up, hence it goes down, that's resistance. And we confirm here by when it doesn't pass this here, that's another confirmation. You have a resistance there. So I keep drawing those, and this is not only for SPY. This is how I trade every single stock. It applies for it can apply for anything. The thing with SPY is that SPY is very liquid on its contracts. It has 3 different expirations in the same week. It follows the levels pretty good. A lot of the times, all resistance becomes new support. So, for example, if we break the 151.70 and it goes down, it's likely to stop at 151.70, and that sometimes that doesn't happen with all stocks. So we have liquid contracts, we have multiple expirations on the same week, we have pretty good consistency and respect for the levels, and it usually moves sideways too. So you can get it both ways. It's not like Boeing today that move all the way up. Like SPY usually doesn't do that. I mean, it happens, but usually SPY move back and forth. There's always going to be a motive trend, which is going to be a stronger trend on all time frames. It can be an upside trend or a downside trend. It can be a consolidation periods, but it will move back and forth a lot of the times. Why is that good for? Because that means that if you get a call and it's going down, you don't have to worry as much. Because usually if you know what support you have, you can expect a bounce back. So you can be a little more reckless with your stop loss. You don't have to panic sell, being afraid that you get a call at 390 and the SPY is going to go at 385. It will affect your contracts that expire the same day, but a lot of the times they come back too. So those are good things about SPY. That's why scalping SPY is a little more efficient than other stocks. But again, you can use this for every single stock that you want. So now I changed 5-day, 15 minutes. I keep looking. So I see that I have one close here. So I already have this level. Just an extra confirmation, which shows me it's a pretty good level. So if for any reason tomorrow CELO breaks 149.23, you can consider get calls. If it rejects 149.23, you can consider get puts. And I always like to give them a little more room. We're gonna get there shortly. So we keep drawing them. You can do one more here if you want, since there's resistance here. You can do another support here. And look at the 5 minutes. See what else you find. There's a little bit of support here. It's here, here, and here. So almost 3 times triple bottom. There's a little more here. And I would leave it like that. So now you have some levels that you can watch. The way I have this set up, I have it on the right click, edit properties, and this is how I have it set up. So as you say, no show name, right extension on. That's why when I draw it, it goes all the way to the right. Lex extension is off. That's why we don't see them extending all the way here, the ones that I end here. Show price on the right. So let me take a screenshot of this and send you. Send you this so you can have it. Always go, so you're going off the, always go lowest and highest wick. Never do the body of the candles again. The wicks are these lines here, and the bodies are the thicker part. So you don't want to do it in the body. You want to look at the wick. Okay, so I think that's good. Okay, let's talk about what else do we have. I think that's good for support resistance. We did talk about volume average, buying selling pressure. We talk a little bit, but let's go more into deep. Candlesticks, EMAs, stop loss, how to play contracts. Okay, so this is all good stuff. We're not gonna talk about YOLOs. Okay, so the volume average we went. I think that's pretty easy to use. Support resistance we went. So buying and selling pressure. For me, the way I read it is especially on the 1 minute. The 1 minute is my friend when it comes to buying and selling pressure. Like, let's see what was a spy play that we play. We play spy today. We play spy puts at 7:26 in the morning here. We play spy puts at 7:26 in the morning. Okay, so let's go through those. It's 389 put, 7:26 in the morning. What are you doing at 7:26 in the morning? That's California time. So that was today at 7:26. Got it 5 minutes, 7:26. Okay, so this one was a late entry because you see how the downtrends start here? And we didn't get all the way until here. So we got in the middle of the trend, which happens, sometimes you miss those plays. At that time, we were trying to figure out buying as well, and I think we're very close to skew. So that happened today. And SPY just start dropping. So what did I see? First of all, we're already going down here, right? I see a 389.19 support, and I see these big candles losing steam here. So I go, okay, well, what's our next support? Our next support is this one here at 389.19. So for me, ideally, I don't want to enter right at 389.19. I want to see the candles at least closing below and going a little below that 389.19. So once the second candle here closes at below 389.19, and I see here, I see the sellers keep coming. At this time, I'm paying attention to what's coming here. How many orders we have coming, how many thousands, and what's the average, and if we're above. So once I see that closing here, remember for candles, if the candle is red, this is the open, this is the closing, this is the lowest point. If the candle is green, the bottom is the open, here this top is the close, and the highest point is obviously the highest point, the wick. So if I see the closing here, as you can see, I try to zoom in more, but I don't think I can. So if I see the closing here, I get in. And I always keep an eye on all these levels. So if I see more breaking here, that's why sometimes I say we gotta break this to make some money. And if so I'm already in here, so I'm just paying attention to the next stop in the same 5 minutes, same thing. That's a 5 minutes. So I don't have to wait until 7:30 for the 5 minutes, and that's the great thing about having the 1 minute open, because if I have to wait until the 7:30 for this candle to close below, I would get somewhere here. I wouldn't even be able to make any profits. I'm most likely getting stop out on the next reversal. But I do see that the 5 minutes still looking bearish. You see there's sellers here, and there's a downtrend with fat red candles coming. So that's good. So that was at 7:26 on this morning. We got into puts in the middle of the downtrend. That's a great tool too, because you're already on a downtrend, and you say, why should I get puts if we're already going down? Well, you can always find a next entry. And that's what we did here. We didn't play the bottom like we played the other day, that we got the whole trend coming. We pretty much play in the middle, but we still make decent money. It was like 20%, 30%. So by 7:30, we were already selling. 7:30, 7:31, 7:41. So what happened at that time? Yeah, I know. That's I'm showing the alerts on purpose, so we know that what time we got in. So yeah, I was showing you guys the alerts on purpose, so we can look at what time we got in and we saw. So, for example, here at 7:30, like you see, there's a support here on the. You can see it better on the 5 minutes. There's another support here, and it looks like we're trying to bounce. So I'm gonna sell some contracts here and make sure I log some profits. You can see it better here. You see 7:30. 7:30. Then at this point, I sold some, so I'm already pretty much risk-free. And SPY's going back up. And I have some. I still have a put that I don't want to go worthless, but I didn't sell it because guess what? We have our old support at 389.19 that became new resistance. Look, it touched it and it went back down. This sold in the 1 minute. It touched resistance, it went back down. So I don't have to sell here. Why would I even if I enter a put here and it goes down, I don't have to sell if it's right at resistance. Why would I even cut a loss here? Like I rather risk more and have a better ratio. So after that, we bounce again, same support, trying to bounce, forming a little bit of dodges here, which means there's sideways, and well, we break below, and that was at 341, right? What time did we close our last contract on SPY puts this morning? Here, 741. So after I see that, I take my profits in my mouth. I'm done. Especially if I see these candles coming here and showing reversal. So that was that's one trade. That's one that we did today. I can show you every single one, but we're gonna be here all day for that. So that's how I read the price action. Look, either we're close to support and resistance. Look at the shorter time frames. Ask yourself, are we going to bounce off the resistance and going down? Are we going to bounce off the support and go up? Or we're actually going to break and fire a stronger trend? Like we're gonna keep going down or keep going up? Help yourself with the candlestick. Learn. I can't go over candlestick patterns today because it's gonna take way too long. There's presentations and books that we share with you guys about candlesticks. You never want to go in the middle of a doji here because a doji means there's sideways. So you don't. If there's sideways, you're gonna have 50-50 chances to go the way you want. You want to see a candle that is actually forming a trend, and always your support and resistance, your entry points. You want to see at least a 1 minute closing below for puts or closing above for calls. So for example, here, this is not a bad place for calls because it closed above that 389.19. The only issue is that you had another resistance way to close. So in order for these calls to be like in good profits, you wouldn't need these other candles to, like this one, close right at it. See more than that. And obviously, the most important thing for me is to pay attention to this little volume, guys. That's how simple it is. Those little volume bars, if you know how to read and if you understand, first, they don't just appear. They form as the price keeps changing. After the period of time that you're looking at, they keep forming. So be aware on what's your average. Be aware, okay, so think or swim. Every 1 minute candle, every 5 minute candle starts even. So if the market opens at 6:30 in California, the first 1 minute candle is gonna open at 6:31. It's gonna close at 6:31. So it'll be from 6:30 to 6:31. The second one from 6:31 to 6:32. And the 5 minute candles. The first one is going to close. It's going to open at 6:30 and 6:35 is going to close. So they always go within the next minute. So that's pretty easy to see. So if you see, well, you know what time it is? 7:55, 56. You know, in 4 minutes you're gonna have a next 5 minute candle, and on the side with volume too. So if it's 7:30, and you just got 7:30, that's going to start building your volume candle as well, your volume bar. So be aware of these bars here, be aware of the average, and look where you're at. Okay, so we're here at 0.09 millions, and 1.5 is the average, but we just start. We just start forming these bars, so most likely we're gonna surpass it, right? So that's good. We're gonna have volume. So if you have any questions, and it can be confusing, or I don't know if you guys think it's confusing or simple. I think it's pretty simple once you get the grip. But learn how to use these bars here, especially on the shorter 1 minute and 5 minutes. That's gonna be one of your most important things, especially before you get in. Let's say here, I want to get in calls. Oh, perfect! The 5 minute looks great, and I see a red bar upcoming on the 1 minute, and I go like, okay, well maybe I hold on that because you get a call here, 390.03, and you see it drives the price all the way to 389.48. So that's 50 cents. Knowing a lot of you would cut a contract for that. You wouldn't even wait for the support to reject. You would just cut. You would panic selling cut. So prevent yourself by playing with the volume bars. Look at the volume bars and understand those on the 1 minute, the 5 minute. It's going to save yourself hundreds and thousands of dollars in the long run. Once it gets here, you see, same, the 390.21, rejected, couldn't pass it, once it passes here and you had volume, oh, it keeps going up. So why not 50 cents? 50 cents, that's enough to make 10%, 15% on your profits for contracts that expire the same day. So that's what we get from volume bars and price action. How to read them, candlesticks.
Can I ask you a
Yes.
question?
Yes.
Do you ever look at like the implied volatility, like right before
Yes.
like a big move happens?
Yes, that's going to be on your option contract. We're going to talk about that later. Don't worry too much about implied volatility on SPY. It's pretty constant.
Okay.
That's more for stocks like GameStop, Tesla, Zoom, stocks that move a lot. SPY does get implied volatility, but it's pretty constant on SPY. It's never like I never got IV crush on SPY. Never. Okay, so candlesticks. Again, candlesticks, we pretty much talk about them. Make sure you understand that a candlestick has to close above or below that support level. Don't go just by the wicks. So let's say you see, well, here, let's get puts below 389.19. You say, oh, it's already below 389.19. Don't just go by the wicks. Make sure that the whole body, that you see a solid body closing below. Not because it's on that price range, means that it's going to go the way down. You can get trapped for that. So make sure you understand your candlesticks. Your candlesticks. Like bear candles, here we open, here we close, it's a lower point. Here we open, here we close, this is the highest point and this is a lower point. Bull candles, green candles are the opposite. We open here at 389.57, we close at 389.91. Highest point was 390.23. The lowest point was the closing, the opening at 389.59. You see, it never closed above here, so it's tough for it to go up. You want to see the body actually getting, you want to see the body of the candle getting to the price that we're looking. That's what you want to see. Type of candles that I have. I use the Heinikiashi. You can use candle trends and candles too. They work fine as well. If you're a beginner, candle and candle trend might help you better because they are, the price action gets a little easier to read. But I'm using the Heinikiashi. Any candle comes, they all work pretty similar when it comes to closing, opening, lowest and highest point. EMAs, EMAs are like my last resource. So if I'm on the 5-minute chart here, I only, as I say, I only have them on the big chart. I don't have them on the small chart. I don't have them here because I just think it would overwhelm me. But I have this open in another screen. I have this, so I can always, with this chart, I can always change the time frame. Doesn't take me too long, so I can keep looking if the position still looks good. Basically, the important things about the EMA is that you want to see when the 8 EMA crosses the 50 and eventually the 21, that's bullish. When the, so if we go, what time? 7:30 again. So that's not zero, that's pi. That's why it was looking a little weird. Today was Wednesday, 7:20. When the 8 EMA crosses the 21 EMA, that means bearish. And that happened also at the same time we got those puts. So you see here, We got the blue one, which is the 8 EMA passing the 21. And again, this is no, I don't look at them too much. I pretty much use them if I need something else. I'm not an EMA expert guy, but if I have them there just in case. Like I already showed you what's the main things I look at, but if you need extra confirmation, if you're in the position and you need to see something else because you're uncertain, it won't hurt you to look at things like that. The more information you have, the better your ratio is going to be. Like for example, here you see the blue, which is the A, crosses the yellow, and then we have a good upside here. So you're gonna make good money here. You have a bounce of support, and you reach the 390.74 for resistance. Every single line that you have, keep an eye. Doesn't mean sometimes they're close, and that's part of the risk you're gonna take. That's why you want to make sure there's enough volume, because if you have good volume, you're gonna get through these lines. But every time you hit this price, keep an eye on it. Either take profits, or if you're not enough position to take profits, just make sure you at least know that something could happen here. It can either break and go more your way and be good, or it can be rejected and you're gonna either wait for the next support if you're in calls and see if you're gonna have to stop loss, or if you just wait for it to break. So all these blue lines, I always pay attention when we get these prices. Stop loss, average down, and follow levels or percentage. Okay, this is a good one. So you got two choices. You can set a stop for the amount that you're willing to lose, or you can just wait for the next level if it doesn't go your way. If you set a stop loss for the amount that you're willing to lose, you are gonna get stopped plenty of times when you keep tight stop losses. Well, let's say, because everybody's different on their risk management. Let's say if you keep a tight stop loss, a lot of people go like, well, this is risky. I'm gonna have a stop loss at 10%. A lot of the times you're gonna get stopped and then it's going to go back your way. And you're gonna find yourself in a situation that, well, I lost $15 for no reason when I could have made $50. Important thing here is that you understand that SPY, there's a lot of sideways always on SPY. So if you get a call here within the same day and it drops, you see it eventually comes back. So I know it's scary sometimes, but look at, and that happens a lot. It's not like Boeing that it just goes up. Oh, well, my finger seems that it just went from here to here, pretty much in almost one trend, like barely small corrections. The spiders, it moves a lot of sideways. I mean, sometimes it can have very abrupt movements, especially like last Friday. Let's look at this chart here. So Friday. So Friday was weird because it went down a lot and then it went up a lot. But that's not what usually happens. I'm gonna go through a chart. I want you to pay attention to how it goes up and how it goes down and how it goes up. You have to familiarize with this stock. You have to understand that it's very normal that it just doesn't go all the way from 0 to 100. It has a lot of sideways. Yeah, I have a strong trends too, but see, this is within the same day. It looks like, wow, it's going crazy here, and all of a sudden you're in the same price that you were 2 hours ago. So that's very important for you to understand. Stop loss, I suggest you, if it's a contract, it's too expensive for you, you shouldn't trade. If you're afraid to lose money, you shouldn't trade at all. do something else. I'm telling you this as a good advice because you're gonna lose money. That you have to be reckless. It takes time. I'm very scared of losing money too. I was very scared of that. It takes time. It takes time and a lot of confidence. But it's not that hard either. Like you just gotta, it's like when you go surfing or you do mountain biking. Sometimes you just gotta get that fear out somehow and go for it. So keep looking at the sideways. Sideways here. From here to here, you make a lot of money. From here to here, you make a lot of money. And all of a sudden, you're back at the same price. This one's strong rally here. That's from today. Pre-market to the first 30 minutes of the market. All of a sudden here, 1 hour within the market open, we're almost at the same price that we opened. Sideways. I want you to look at the sideways on SPY. Look at it and enjoy it. Sideways. Today was more sideways than usual, but if you go before Friday, that was Friday, Thursday, so same thing here. In here, we see sideways as well. Play both ways. Okay, so why do I want to show you that, guys? Because what I do, since SPY contracts are so liquid, I don't set a tie stop loss. Sometimes I set a stop loss, but it's very it's at 50-60%. Because let's say my internet crashes or something happens, I have to leave in an emergency and I have contracts open, I have to have a stop loss. Because if I need to leave, if something comes up, or if the country gets into something very weird, like and if SPY reacts to that, it's just like, okay, well, at least you got a stop there. So it's not because I see it drop 30 stop out. Leave my finger string crashes or I don't have something happens. I sometimes set stop loss for that, but SPY contracts are usually pretty liquid. What does that mean? The spread between the bid and the ask is not that big. So that means that you're gonna get fills faster and easier than other tickers. That also means that only for SPY, you can do market orders. As long as you double check them, you can do market orders and get a right fill because the spread is so small that for paying $1 or $2 more per contract, it's worth to get your entry. For stop loss, what I do, which I showed you a little bit. So let's say I buy puts here at 7:35, 7:26 we bought puts. Let's go on the 1 minute. 7:36. Let's say I bought puts here, right? 7:26. That actually happened. We did that this morning. So let's say we go up, or let's say we went all the way here and take profits. And now we're going up and we're on puts. What I want to see, okay, what's the next receipt? I see a 389.19 and I see a 389.57. So I can be like, can I afford to actually test those levels? Or is that going to hurt me a lot? I personally go for it. And so if I see it breaking 389.19, I go like, well, I might have to stop here, either that or wait to 389.57. So let's say 389.57, let's say it passes it. So I never do my entry right at support resistance. I never cut right at support resistance. So if I see a 389.19 support and I want to get puts, I want to at least see a $15 drop from that support. I don't want to buy at 389.19 or 389.18. So I can say, well, let's go puts below 389. You can even make a round number and make it easy. Because from 389.03 and 389, there's not that much difference. Same here. So I'd be like, okay, not just because it went to 389.20, I'm going to have to cut my put. If it goes to like 389.35, 389.40, like it's already above that level, then I might do or for 389.57. And same thing. Not because it goes to 389.6, I'm gonna be stopping. I want to say like, okay, if it goes like above it, if it breaks that level, like goes to 389.70, then yeah, I might have to stop it here. So that's why I'm not that conservative with my stop. I actually look at the next level that it's going to try to help me. Same with my profit taking. If I see a support at 388.66, I go like, well, I want to see SPY going below 388.50, break that, and that's going to help me making more money. And so the good thing about that, the bad thing about that is that you're going to be a little more reckless with your stop. You're going to be risking more. The good thing is that you're gonna have a better ratio because you're not just selling because it's not going your way. You have a clear understanding of what you're doing. And I personally do that. Yeah, when I lose, I take a bigger loss, but we don't lose on SPY that often. I mean, you get that, so I do it, and that's probably why I lose that often. A lot of you cause sometimes I see like yesterday. Yesterday we played puts, and people were cutting for a 5% loss. I mean, that's your choice, but I just don't see a point. If you get afraid for a 5% stop, for a 5% loss, if that it's bothering you, I think you're probably playing a wrong contract. Like you're doing something wrong because you shouldn't be taking hits for a 5% or 10% loss. You should at least be comfortable with losing 20-25%, especially if you know contract is expiring today. Contracts expire the same day, they're gonna move a lot more. Okay. So I think that's good with the stop loss and the percentage. So I follow levels, I don't follow percentage. Average down, same thing. If you still like the trade, you can either make the decision of stop it or take an average down. Like we did that with PA this morning. It worked good because I was still confident. I just got unlucky that we got a bad entry. How to play contracts that expire in the same day and the next day. So for when we scalp it, we have contracts that expire Monday, Wednesday, and Friday. I always want to get the closest expiration that I can. That means that if I'm trading on a Monday and I want to trade SPY, I'm going to have a contract that expires on Monday. If I'm trading on a Tuesday, since contracts of SPY don't expire on Tuesday, I want to have a contract that expires on Wednesday. And like that, if I'm trading on a Wednesday like today, I want to get one that expires on a Wednesday. What's a good thing about it? Good thing is that if it goes your way, you're gonna make money pretty quick. So if a spike drops, if we get puts from 389.19 and we're closing them at 7:30 at 389.63, we probably didn't even get at 389.19. We probably go below 389, and we close some of them at 389.50. And we make about 25%, 20% on a contract, that's pretty good. Only for 50 cents move, not bad at all. The pro is that they lose value quick. So you're going to protect yourself of that by getting contracts in the money. You guys know in the money, out the money, not the money, right? So if you're getting puts and the price is 389.19, you want to get a 390 put. You can get a 389 put, but you're gonna be at the money, not in the money. So if it goes below 389, it's gonna be good, and you're pretty close because it's at 389.19. But if for any reason it goes to 389.70 something, 380, even 390, it's gonna lose a lot of value. So in conclusion, just if it expires today, get in the money contracts. If I would do it, I would get a lot deeper in the money, but I can do it because I know you guys. Those are a lot more expensive, and we need to make plays for everybody. We can just make play for people that have $10,000, $30,000 accounts. So make sure you get it in the money. Otherwise, don't even bother doing it because you're just the reason why we pick those. There's a reason why we pick those contracts. Like we want the contract with the best probability. So if that contract is not the one we're playing, I mean you can still make money, but if it doesn't go your way, you're not going to have the same probabilities that we do have. The problem is when a contract is in the money and gets out the money, the value that it loses, it starts losing value fast. That's why you gotta make sure you understand that if you get a 390 put and the price is at 389, you have $2 to get that contract out of the money. So you get a pretty good contract right there. If it goes above 391, then you say, okay, my contract is not now out of the money, so I might have to stop it here or look for the next resistance and know that I'm out the money. If it doesn't go back down, it's going to lose a lot of value fast. Same thing with calls. For contracts that expire, say, you can actually get them out the money. I'm not gonna go through butterflies and plays like that, sorry. But I don't have that much time, and there's a lot of classes on butterflies. We can do another class of that, or you can look at the recap. Right now, I'm just talking about how it scalps SPY. That's how we do it. I go through butterflies, not today, but it's already an hour. There's a class on butterflies, and all the other spreads, debit spread, credit spreads. Kian have done classes of that. Okay, so for contracts that expire the next day, you can actually buy 1 or 2 strikes out the money because you know they're not gonna same day. The thing with that, for contracts that expire in the same day, if we get in and move 30 to 50 cents to our favor, we should go to 15-20% on our position. Well, make sure you guys are muted. So for contracts that expire the next day, we need a bigger movement. We need more like a 50 to 75 cents movement to make about 10 to 15%. So they are not as risky, but they'd be more expensive and they give us more money. But again, in conclusion, so if the contracts expire the same day, we're gonna get them in the money. If the contract expires the next day, we can get either in the money or 1 or 2 strikes out of the money. Just make sure you understand, if you get out the money, you want bigger movements on your favor because the contracts are not gonna move as fast as they move on in the money contracts. Also, delta is higher in the money contracts, so you're gonna make more money faster. That's why scalping SPY is good, because you don't have to go for SPY to move from 389.58 to 387 to make money on puts. You can actually have it from 389.58 to 389. That's only 50 cents. And you're going to be making 30% on a contract that expires the same day, and it's in the money. So that's a pretty good deal. How to play contracts. Entry, exit, and price action, we went through it. Again, Entries, I want to see, there's two options for your entry. You either want to see if you're at resistance, you either want to see a breakthrough resistance, so making sure that the candle closes above, that's in to play calls, or you want to see a bounce back and a reversal, and that would make you an entry for puts. So for example, here, I would buy puts here since we closed below 390.5. And that's going to take me all the way to 390.15. So that's about a 15 to 20% position here on a contract that will expire the same day. And you're playing a reversal. Just make sure reversals are less, the win ratio on reversals is less than on breaks. But you can still make money playing reversals. I think what the put that we played on Monday was. Let's look at it. There was a play that we made money. It was like 100%. Where was it? Monday.
What's your last play on Monday?
Okay, so that's 3-8 and 54. Let me look it on my phone. What time did we get in? Remember, Monday, that contract expired the same day, and it was already about half of the day. So those contracts move fast. Doesn't go our way, we gotta be careful. But if it goes our way, we're gonna make a lot. So let's recap that one. And that was Monday. At what time did I alert that? It's on my phone. I can see a time. Well, I'm pretty sure if I'm not able to see it.
I got it in chat.
What time it was? 1:47. Is that 10:47?
It should be.
Yeah, no, but that's when we saw. So that won't show you. All right, it doesn't matter. Let's just go through Monday here. Monday. So Monday at 1:47. So 10. It was here. I remember now. So we actually got in about 10:30. What happened? Okay. We have resistance at 380.64. We had a solid uptrend. No resistance here. Again. Wait, I want to show you what I was looking at. So let's not even look at the big chart. So let's look at the charts that I was looking. Monday. This is gonna be a 1 day, so I don't know if it's going to allow me. That's Tuesday. Okay, the 1 minute won't let me do it because it's shorter. So for Monday, it's not gonna show you exactly what I was looking at, but it can at least show you something on the 5 minutes. So Monday, that was our play that we made great profits. We saw a bounce out of 387.64, and I was like, well, what's the next support? By 387 here. So as we're once we broke, because at this point when I started looking at it, it was somewhere in between this price. but I didn't want to get right at the, so I made sure the candle closed below, and then look what, and I was obviously looking at the volume, as you know, that's, and then look here, every single one of these lines I kept an eye. So if it broke strong, I keep holding. And I saw my last one somewhere here, right at this support. Then it bounced back, and it went back down. So right when we broke the last support, it kept going down. So that was the one from Monday. It was also a put. We got it in the morning, and we made over 100% because that one, it doesn't happen all the time. Sometimes you make better plays than other plays, but sometimes you also get lucky and it doesn't hurt. So that's how I look for my entries and exits. I draw my own supports and resistance, and I wait for price action at those levels. So whether we're gonna break it and go above or below, or we're gonna reject it and go down and up from there. And that's all I have. But if you guys, I can stick around for another 30 minutes if you guys want to do a question answer. Was that clear? Did it help you guys? I don't know how I did. I'm not a teacher, so that's pretty much how I do it though. That's so now you guys understand how I do it. So what I want you is to be all on the same page, same boat. Now you know what I look for. And you can apply this for every single trade. Like I do it for all my trades. It's just against Pi, since we are so familiar with Pi, it becomes easier. And instead of having a 95% ratio, as we do on other stocks, we have over 95% ratio. Like, doesn't mean that we never lose, but we can watching support resistance and volume, and yeah, and time frames. Make sure you watch at least the 1 minute, 1 day, 5 day, 5 minute, and the candles. Those are important things. Volume average, too, not just volume. And you can always YOLO to the moon. No, unfortunately, on fun, no. Fun is because the thing about fun is that it's a lot harder. I mean, if you realize a way to change the time frames, it's just going to take you a lot more work, and I don't think it's as Shane says, limited. So I mean, this works better for people that are at home and have multiple monitors. You can still use your phone. You're just gonna have to change in time frames. And the thing about fun is that when you're filling an order, you're not able to look at the chart. And that's something that I don't like. I like to have my order ready to go and be looking at the 1 minute and the 5 minute at the same time. So if I see something at the last second that I don't like, I hold. That's why a lot of the times in the morning, I tell you guys, okay, let's wait here, because I don't want to buy something if I'm not looking what's happening right at this second. And sometimes it happens that I buy, and right after I buy, let's say I buy a put, there's a big green candle building, and I go like, well, right when I buy, there's a green candle building. But I always tell you guys, don't panic. Just let's wait, let's see what happens. Like, just because the volume is showing you green doesn't mean we're gonna go up 2 points. Always look. If you get a put and you are down, wait for the next resistance, see what's the volume that is coming. If you get a call and you're down, wait for the next support, see upcoming volume. Yeah, don't panic. Don't panic. Don't do it. You can't panic. If you panic, you need to go and don't trade. You need to find a way to deal with the panic first. If you're scared of losing money, like, you gotta get reckless. Like, don't just Yeah. Average down as long as you keep liking it. But I think I'm gonna start averaging down more because all my positions come back. So average down. It's pretty much what. Okay, I want to talk to you about that because average down, you are going to risk more, but if you know what you're doing, you're gonna have a better ratio. So it's gonna be the same with instead of panic sell, wait for support and resistance. You're risking more, but if you know what you're doing, you're gonna have a better ratio. So yes, your loss is gonna hurt you, but a lot of the times you're gonna be able to come with money. Exactly, yeah. Facebook and BA, they both pay off. I didn't average on Facebook, but I did average on PA, and it ended up pretty good. Yeah, you wanna make sure that if it expires the same day, you wanna get it in the money. If it expires the day after and you don't want to pay such an expensive premium, you might want to get one strike out the money. But yes, you gotta put the closest. The closest to the stock price is the best. These charts don't apply to earnings. Always when you get a contract expires the same day and you see 30-50 cent movement on your favor, you have multiple contracts, it's not bad to take the profits. You can also look at the 1 minute chart when you're thinking about taking profits. Make sure you see, okay, what's coming here. If I have a call and there's a lot of green candles here forming, I might be able to hold it for a little longer. And if I have a call and I'm in nice profits and I see the candle reversing here and I see red volume coming, then maybe what was saying, then maybe take profits because now you see some selling coming and at least log some. You don't have to sell your whole position, but just taking profits is never bad. Yeah, dude, don't be afraid of paying the premium. Like honestly, for SPY, you can even do a market order. Just make sure you understand. You look at the bid and the ask. Sometimes I see you guys that I alert at 1.4. The thing went to 1.44, 1.45, and you guys know I'm not gonna sell at 1.45. So we always look for at least 10-15%.
Hey, Elkin, do
At
you mind
least.
if I give a quick tip?
Oh,
Is that all right?
yeah, go.
Okay. One quick tip that I ended up doing today that actually helped me out a lot was when you're thinking about getting into a position, just look at the premium, watch what it's doing. Look at its range where it goes from like low, where you feel it's low, and where you feel it's pretty high. Sometimes just looking at the premium prices, you could kind of get an understanding of like, is it topping here? Does it feel like it's getting weaker? Just watch the movement. And then just keep that in mind throughout the day because you may want to circle back at it one time. So let's say you get something at like 56 cents. Well, maybe later on in the day, you're going to realize it's at 35 cents. And you know what? This might be a good entry in the future. So just keep in mind, or it's going to go up 80 cents and then it's kind of overpriced. But even just watching your premium before you get in. So sometimes I'll watch SPY for about 15 to 20 minutes before I even make a move. I just want to see how SPY is moving, premium prices and candles as well. So those are the two things. I just keep watching, keep watching.
Yes, and also this is for SPY. Make sure you understand before I continue talking. For SPY, a lot of the times I do order on my options because the spread is so small that I rather pay $1 more for the premium that I want, but get a fill right away. Because what would happen if you to put a limit order and you put in more towards the bid, you don't get filled, and then SPY starts moving, then you're gonna have to pay 10-15 bucks more. So because you're gonna have to cancel the order, put a new order with a new limit. So only for SPY. Always check at the bid and the ask too. Don't just buy a limit or a market order out of nowhere. So you look at the bid and the ask, and you see, okay, the bid is 144 and the ask is 145 or 146. That's fine. I get a market order. Don't do that on Boeing. Don't do that on Zoom. Don't do that on Roku. Don't do that on anything else. And don't do it without looking at the bid and the ask. If you want to do a market order, and I know I try to get $1 less, but sometimes I ended up paying more because I didn't get the fill. So sometimes I do market orders on SPY only. Only on SPY. Don't do it on anything else. And always check the bid and the ask. Also, guys, if I alert something, SPY X call at 1.4, don't just open your phone or open your computer and put an order at 1.4. Make sure you look at what the premium price is, because the premium can be at 1.42 and you're not getting a fill just because you don't even know that if you pay $2 more, you get a fill right away. Or the premium can be 7, and now you're gonna pay a little cheaper than my premium. So just don't just look at my alert and try to put a random premium that I like. That's how much it was by the time I got in. So if you're looking 1 minute, 30 seconds later, make sure you know where is this premium right now. And if you get a cheaper premium, you get a cheaper premium. If you gotta pay a few more bucks, you pay a few more bucks. Don't pay 10% more, but you can always pay $5. Like, I'm not gonna, if it's a $150 position, I'm not gonna sell it at 155. All right, well, you guys have any questions? Type them down. If I don't get any questions in the next 2 or 3 minutes, I'm gonna call it a day.
My question for you would be, I don't know, I sent it to you on premium, but let's say that I wanted to do a play and I wanted to hold SPY for like 2 to 3 hours or something like that. Like, what time frame are you looking at? Are you looking at like the 15 or the 30 to be like, okay, I might see the direction I want in about, in a few hours. Are you looking at the higher time frame like that, like 15, 30 minutes? Or are you checking still like the 5 minute and kind of seeing from there? Or is it purely just your support and resistances where you're like, okay, I'm gonna hold it for a little longer? How do you gauge it between a scalp and like just the intraday?
Well, because the contract, if the contract expires the same day, what I would do, before my entry, I would still look at the 1 minute, but on an overall, I would look at the 15 minutes and 30 minutes and 5 minutes. I would have 4 charts open at the same time. I will do
Okay.
something like that. Hold on.
Okay.
Let me show you. You can see my screen still, right?
Yeah.
If that's not, I wouldn't do it for that long, but it's not a bad idea either. So I will do something like this. After the 1 day, 1 minute, 5 day, 5 minutes, 15 day, 5 minutes, and 30 days.
Okay.
30 days, 10 days. 10 days, 30 minutes. And if you like all of them, get in. If you don't like one of them, make sure you understand well why I don't like it. Is this going to affect my position? Like, Always start here, though. Let's say you get calls, okay? So if it's not gonna go your way, the first chart telling you so is the 1 minute. Second chart telling you so is going to be a 5 minute. Third chart telling you so is going to be a 15 minute. So you have 3 charts telling you I'm not going your way. Well, how much am I down? That's something you gotta look to, right? And now you say, well, the 30 minutes is still telling me that there's a hope. So if I can afford a little more downside or I'm close to the next support, I'm just gonna wait for 30 minutes, and then eventually you see a 15 minutes is fixing now. Oh, now the 15 minutes is telling me that I'm good. Oh, now the 5 minutes is confirming. So you kind of like play with them like that. Is that clear?
Yeah, it does. Thank you.
Can you quickly repeat which charts you use to create? So just go here, drawings, drawing tools, and the second one here, price level. And this is not only for SPY. You can do this with anything. Yeah. Well, for the swings, it depends how long you wanna be on a swing. I usually look at the 180 days and 4 hours, and you can look at the yearly too. So any of these are good. You can start with the 20 days, 1 hour, and do 90 days, 4 hours, 180 days, 4 hours, and 1 year, 1 day. But it all depends. You're gonna swing it for 2 weeks or 6 months. So your support and resistance, you use any time frame. You start from big time from longer time frames to shorter time frames. But yeah, a lot of the times I'm here and I see, okay, we have support here, so here I draw it. So a lot of the times I just draw it right there. You're good. You're on mute now. So yeah, you can use any time frames to draw them.
Yeah, Elkin, you can hear me?
Yeah.
Yeah, so I know my question wasn't about. Okay, yes, yeah, I see Ken talking about the 15-minute candle. So my main question was, so I know you when you went over sort of how you're drawing your support and resistance for scalping. I know it's sort of kind of the same way for like swings.
Yeah.
So for swing plays, do I need to start at like the 1 day and then draw my support and resistance there and then go to the 4 hour and then look for my entry on like the 1 hour? I think that's what's confusing me, and I feel like I'm like overcomplicating it. So I think that's like my main question is like what time frames for like oh okay, I see Ken said yeah, but
Yeah. So you can start on the 1 year chart and see, okay, I have a resistance here. I have another one here. Then you go to the, okay, let's go to the 180 days and 4 hours. I have another one here.
okay.
Another
And
one here.
another thing too, so
Support.
he's talking about start with the 4 hour and then go higher. So
Yeah.
when we're looking at volume for swings, are you guys looking for like really green volume that's above the yellow line? Is that
Yeah.
so like giving you like
Same thing. Same thing that we look for scalps, or at least me. Same thing. It's just going to be a different time frame. Remember, every single one of these bars are going to represent the. Okay, and say if the previous day is higher than average.
the previous day is higher than the average? Okay. Okay, so like if you're looking to go long, you would want the previous day to have like really good green volume that's above the yellow line. So that would indicate it's
Yeah.
higher than the average. Okay.
Yeah. It's going to volumes.
Okay. I have Kian's study that has like the resistance 1, resistance 2, resistance 3, support 1, and all that, but I don't have that volume indicator with the line. Is it okay if like someone shoots me that so I can start to
Get it? I think Shane has it, or
Okay, I'll get it from him.
it might be pinned. He can send it back to you.
Okay.
Yeah,
Yeah.
the studies are
It's
pinned.
pinned. So if you go to the pin on the premium, you're gonna see the custom volume indicator. You see it?
Okay.
So just go on the premium and go pin message, and it says the one that Shane pinned it. It says custom volume indicator.
Let us know if you find it.
And oh, and I guess now that we're all talking here, I might as well ask another question. So when you guys, so I understand now that it's more or less like you're drawing your support and resistance and trading off of that. But how do scanners come into play with all of this? Like, is it like okay, every single day at market end, I'm hopping on a scanner and like looking with a scanner, and someone has some really good scanner out there, or like scanners don't matter and
Especially volume on or say that. I don't use them for scalping though. I just go for spike. But I think scanners are better for swims. Like a lot of the swings I find using scanners, and they're all like you can find all the scanners on the TOS scanners. That's where the so if you see Kian, just share one that is about volume. So that's a good one. So yeah, they see anything that you like. You got this if something
Yeah, I was going on YouTube and trying to create some custom scanners with a think script, and trying to do the think script was kind of confusing. So yeah, it would um that's why I was kind of wondering, like, oh, you guys probably have a way better one than what I'm doing.
Yeah, honestly, I don't think so. I
Yeah, I'll be there
My
tomorrow.
scanner's a spy. Whenever I'm bored and I don't find anything, I just go for spy. But no, I do use them every once in a while for swings. Also, Kian has a black box too, and that's pretty much like another scanner, but for options because it tells you your neutral activity.
Okay. Yeah,
Hmm.
I appreciate the
Yeah.
lesson, guys. I will be there tomorrow morning for that scanner
All
key,
right.
and appreciate that, guys, and I will see you guys
All
later.
right.
Get it.
All right. Well, I guess I guess that's it, right? Well, I hope that was helpful, guys, and hopefully now you know what goes in my mind when I'm doing spy. I think if we're all on the same page, that's going to help our crew a lot. A lot. We're gonna,
Hey, Elkin, I got a question.
sir.
Hey, I showed up late. I didn't put the kid to bed, but it's just pertaining to volume when entering the trade. Are you just looking for above average volume for buyers or sellers to enter the trade?
Always good to be above average. What I do, different time frames, especially in the 1 minute and 1 day, and the 5 minutes and 5 days. As you see here, every single one of these bars, it's 1 minute. So I want to see once the first bar starts, I want to see what's the average and where we at right now.
Right.
Because these ones they don't just pump like this. It's not like you have nothing and all of a sudden you have a green bar all the way there. They keep building according with the time frame that your chart. So here
Okay.
1 minute, here are 5 minutes. I want to see how they're building. I want to see when the new candle is coming. So what's coming? Is it coming red or is it coming green? Is it gonna turn? Is it turning red or is it turning green? That's what I want to see too. I want to see many of them are coming. That's pretty much what I look. It sounds easy. It's easy.
Okay.
Like it's no volatility indicator, but it's range price stocks right now. I don't use ATR for scalps. That's some that I do. But yeah, so obviously above average is always good. It's that's like ideal above average. Ideally twice above average. But also know what's coming. Like the 1 minute is very important, especially when you enter a position, because you see what's incoming. So if you see like there's sellers incoming and you're trying to get a call, maybe be like, okay, well, let's wait for them to get shaken. And once the volume turns back into green and you have some good candles
But
building strong, yes,
you should be able to tell from the wicks and the shadows, right? If they're getting pushed out, the buyers or sellers.
as well, as well. Those two
Okay.
together, candles and volume. They're
Okay,
they're
cool.
both gonna be telling you the same thing.
Perfect.
But it's just since there's nothing here that is 100% accurate, the more confirmation you can have, the best.
All right. Thanks, bro. I appreciate it.
No problem, man. All right. All right, guys. I think if there's no more answers, let's call it a day. Get some dinner, some sleep, and come back tomorrow. Sounds good.
Yeah. Alrighty, guys.
All right.
See you guys. Good job, guys.